What if you could peek behind the curtain of a global financial powerhouse? Not just to see the numbers, but to truly understand the strategy and innovation shaping how we pay and get paid every single day.
Yeah, that's exactly what we're aiming for today. We're doing a deep dive into Mastercard's second quarter 2025 earnings, pulling insights straight from their recent earnings call and, their detailed financial reports.
Right. Our mission is to cut through the jargon, give you the most important nuggets of knowledge so you can quickly get well informed on what's truly driving their performance, maybe some surprising ways they're expanding their reach, and the critical challenges they're navigating.
Okay, so let's unpack this right away.
Yeah.
The headline for Q2 2025 is a very strong quarter. Net revenues were up 16% on a currency-neutral basis, hitting $8.1 billion.
16%. Wow.
Yeah. And adjusted net income also saw a healthy increase, 12% currency neutral, bringing adjusted diluted earnings per share to $4.15.
And this really robust performance, it's underpinned by solid growth across the key metrics, right?
Exactly. Gross dollar volume, that's the total value of all transactions, was up 9%. Cross-border volume, those international transactions, up 15%.
15% is pretty hefty for cross-border.
It is. And switch transactions, basically the number of times they process a transaction, grew by 10%.
And here's something I saw that's really interesting. The penetration of contactless technology, it continues to soar.
Oh, absolutely.
Yeah.
It now represents, get this, 75% of all in-person switched purchase transactions. 3/4.
75%. That's a massive shift in how people pay in stores.
Definitely.
And this strong financial picture, it's set against a backdrop of, well, generally healthy consumer spending, wouldn't you say?
Yeah, I think so. It seems supported by low unemployment and, wage growth. It's still outpacing inflation. We're seeing that across both affluent and mass market consumers.
Okay.
But it's not all completely smooth sailing. There's still that macro uncertainty driven by government actions, geopolitical tensions. It remains a factor they're keeping an eye on.
Sure. Always something on the horizon. So, given that backdrop, what are the key engines driving this impressive growth? Where are they really, hitting it out of the park?
Well, it really boils down to strategic wins and pretty aggressive market expansion. For instance, they're securing some really significant deals.
Say.
Take American Airlines. They've extended their exclusive partnership. That's one of the world's largest credit co-brand portfolios.
Huge deal.
It is. And it's not just about the cards anymore. This partnership leverages Mastercard's advanced analytics, loyalty, personalization, security solutions. It shows how they're embedding themselves deeper.
Right, becoming more of a tech partner, less just a transaction pipe.
Precisely. They're moving beyond just the payment itself.
That's a fascinating evolution. And I see they're partnering with some other household names, too.
Oh, absolutely. New collaborations include a credit card launch with Walmart across the U.S. through OnePay and Synchrony.
Okay.
And their relationship with Uber is expanding. They're extending the exclusive Uber Pro Card portfolios in the U.S. and Canada, plus launching new programs in places like the U.K.
So really doubling down on these high-volume partnerships.
Definitely seems like it. And they're making big moves in the fintech space, too.
Right, I saw that. PayPal.
Yep, extended card issuing with PayPal in the U.S., plus new credit and debit issuing agreements in the U.K. and Germany. They even launched a contactless mobile wallet in Germany recently.
And buy now, pay later, that's still a hot area.
It is. And they signed an exclusive prepaid and credit card issuing deal with Afterpay in Australia. So they're definitely adapting to those newer payment models.
It shows flexibility, doesn't it?
It does. And they're also renewing major partnerships in key growth markets. Like in Argentina, they renewed with Mercado Libre, consumer prepaid, and new credit cards.
Which is a massive e-commerce and fintech player there.
Huge. Plus, they renewed with C Corp, a major credit union in Brazil, across credit, debit, and commercial. It's all about locking in these big players in, rapidly digitalizing economies.
But it's not just about these huge partnerships, right? It's also about making it easier for you listening to use Mastercard everywhere, like in transit.
Exactly. Over 60 new public transport operators just came online. Places like Ventura County, California, Taichung Metro, and Taiwan, all accepting Mastercard contactless payments now.
That convenience factor is key.
And here's an interesting evolution, especially in China. Tap to Pay launched in Shanghai Metro this quarter.
After Beijing last year, right?
Correct. And this marks a significant shift because it brings NFC technology, that's the Tap to Pay tech, into ecosystems that were primarily QR code based. It gives people more choice.
And online, they're pushing towards that single-click checkout vision.
Very much so. Their 2030 vision. It means driving adoption of tokenization, click-to-pay, and payment passkeys.
Okay, let's break those down quickly for listeners. Tokenization.
Basically replaces your real card number with a secure digital token for each transaction. Much safer.
Click to pay.
That universal online checkout button stores your details securely across different sites. Simple.
And payment passkeys.
That's the newer thing, replacing passwords for smoother, more secure logins.
Got it. Are they seeing actual uptake on these?
Real traction. In Europe, over half of e-commerce transactions are now tokenized.
50%, wow.
Yeah. And in Australia, big banks like Commonwealth and Westpac are automatically enrolling people for click-to-pay. That's mass adoption.
So it's becoming standard.
It seems like it. Issuers globally, NatWest, Standard Bank, even Bank Vostok in Ukraine, are committing to making click-to-pay a core card benefit. And that's led to a 4 times increase in merchants using click-to-pay year over year.
4 times. Okay, so that strategy is clearly working.
Definitely paying off.
Beyond those traditional areas, I saw they're pushing into new verticals, like insurance.
Yeah, that one's interesting. Insurance payments. Despite huge amounts of money flowing and consumers wanting digital options, card usage there has been surprisingly low.
Right, you mostly think checks or bank transfers.
Exactly. So it's a big opportunity. They've got new agreements with partners like Checkout.com, Stripe, Transcard, WorldPay.
Big names in payments.
Right. The goal is to let consumers pay premiums with cards, get claims disbursements faster, even facilitate B2B payments within the insurance world. Make it all smoother.
They're also using alternative distribution channels, stored value wallets?
Yes, enabling those globally. A key partnership is with Alipay in Hong Kong and Gcash.
How does that work exactly?
Well, it means 36 local e-wallets can now be used cross-border through the Alipay Plus wallet gateway. It automatically adds Mastercard credentials.
So someone with a local wallet in, say, the Philippines using Gcash.
You could use that wallet anywhere. Mastercard is accepted internationally. It's basically turning local e-wallets into global payment tools via Mastercard's network. A huge vote of confidence for NFC tech, really.
That's incredibly convenient for travelers.
Absolutely.
Okay, let's talk about innovation and the consumer experience itself. What are they doing there?
Well, personalized offerings are a focus. In Canada, for example, the CIBC Adapt a Mastercard automatically gives extra rewards based on where you spend most each month.
Adapts to your spending.
Right. And it includes touch card functionality. That little notch helps visually impaired cardholders easily tell their cards apart.
That's a thoughtful touch. And for the higher-end, affluent customers.
They're definitely focusing there, too. Elevating the Mastercard collection of premium benefits, expanding the World product suite with the new World Legend Mastercard.
World Legend sounds fancy.
It's their most prestigious consumer card, launched first with the Citi Strata Elite card. It's about that premium experience at every level.
And flexible payments. I saw something called Mastercard One.
Yeah, Mastercard One. It's a network-level capability. Think of it as a single digitally connected credential, meaning you, the consumer, could choose how to pay, debit, credit, prepaid, installments, maybe even stablecoin, all through your existing banking app using that one credential. More choice at the checkout.
Interesting. So leaning into emerging tech like stablecoins.
Definitely. They view stablecoins as additive to their network. They can provide the on-off ramps, the interoperability services, reach, and importantly, trust.
And this jaunty commerce they mentioned?
Yeah, jaunty. Basically means easy, secure shopping. It involves scaling something called agent pay globally.
Agent pay.
Think of it as allowing customers, maybe in emerging markets, to pay through a trusted agent or assistant. It overcomes certain infrastructure or trust barriers.
Got it. Okay, shifting gears slightly to commercial payments. That seems like another big growth area.
A huge focus. They're bringing differentiated capabilities there, like the Small Business Navigator in the U.S.
What does that do?
It gives entrepreneurs tools, cybersecurity help, insights, partner offers like discounted point-of-sale systems from Pfizer's Clover, educational stuff from Square, an ecosystem of support.
And for bigger businesses, fleet management.
Yeah, new capabilities there too. Fleet cards can now be integrated into digital wallets, partnering with companies like Corporate.
So instant digital cards for drivers.
Exactly. Fleet managers can issue and manage cards instantly. Plus, they can capture data like odometer readings right at the pump, modernizing that whole process.
That's a big efficiency gain.
Definitely. They're also scaling their proprietary virtual card tech for invoice payments. It's live with 8 big B2B platforms: Coupa, Oracle Fusion Cloud ERP.
So replacing paper checks for business payments.
That's the goal. And their Receivables Manager platform helps businesses accept those virtual cards more easily, available through partners like EasyPay.
And they're expanding distribution for small business cards, too.
Yep, through Payoneer in Europe and e-commerce marketplaces like Box Commerce in Africa, reaching small businesses where they operate.
And Mastercard Move. That disbursement platform seems to be doing well.
Really strong growth, over 35% year-over-year transaction growth in Q2.
Wow. What kind of use cases?
All sorts. They're partnering with Jack Henry for community banks, New Way in Canada for near-instant business payouts, BMO Canada for cross-border services in, I think, 20 additional corridors.
So becoming really integral to how money moves, not just how it's spent at the checkout.
Exactly. It's a broader role.
So if all that is the engine of growth,
Right.
what's the secret sauce? What really sets Mastercard apart from the competition?
Okay. This third strategic pillar, value-added services and solutions, this is really where they differentiate, I think.
How so?
They're leveraging their huge amount of data and their product capabilities to capture, adjacent revenue opportunities, meaning penetrating existing customers deeper, finding new types of customers, targeting different buying centers within companies, and rolling out entirely new services. It's broadening their scope.
And what's fascinating, you mentioned earlier, is their focus on delivering actual outcomes for clients. Can you give some more examples?
Sure. Like with Guarantee Beebware, they're helping revamp their digital wallet, optimize collections, boost credit card sales. With Deutsche Bank, they're using open banking to grow account-to-account payments in Europe.
So it's not just selling a technology, it's solving a specific business problem.
Precisely. They're positioning themselves as problem solvers.
And it goes beyond just payments, right? You mentioned Lufthansa.
Yeah, and an ad tech company called Belize. They're winning business for things like scalable testing, for media measurement and marketing, leveraging their data and insights in completely new ways.
That's expanding the definition of what a payment network does.
It really is. Another example, Stone, a big acquirer in Brazil, is planning to use Mastercard's small business credit analytics product to improve how they offer credit to SMEs.
Using Mastercard's data smarts for lending decisions.
Right. And Solidgate in EMEA uses their identity insights to cut down fraud and increase payment acceptance rates. Tangible value.
They also launched something new for account-to-account payments, Account-to-Account Protect.
Yes, A2A Protect. It combines cutting-edge fraud prevention with a new way to handle disputes, aiming to make those direct bank transfers safer for consumers.
Where's that launching?
Starting in the UK, with big banks like NatWest, Santander, and Monzo, it seems like you're actively trying to make A2A as secure and trusted as card payments.
So, looking at the core differentiators, what really stands out?
I'd say cybersecurity and consumer engagement are huge. Fraudsters are getting smarter using the latest AI, even generative AI.
Scary stuff.
It is. But Mastercard's Decision Intelligence Pro counters this. It uses data and also generative AI to actually predict fraud before it happens. That offers clear, identifiable value. It's proactive.
Being ahead of the curve.
Exactly. And on the consumer engagement side, their acquisition of Dynamic Yield gives them really powerful personalization tools. They help clients like retail banks use it to drive new account growth.
So, connecting this back to the big picture,
Yeah.
It's not just about charging more or taking price, as they say.
No, it's framed as providing value. And doing that for existing customers and new ones in new parts of businesses in new markets globally, basically expanding their share of wallet to capture more of the entire global wallet.
Makes sense. But of course, no global powerhouse operates without complexities and headwinds. Despite the strong Q2, they are navigating some challenges, right?
Absolutely. There are definitely things to watch.
Like the lapping effect you mentioned, comparing to really strong wins last year.
Exactly. They had significant portfolio wins in 2024. Citizens, Wells Fargo, small business credit, for example.
Yeah.
So when you compare Q2 2025 to Q2 2024, the growth percentage might look a bit less dramatic, even if the underlying business is strong.
Because the comparison base was so high.
Right. And they said this lapping effect became more pronounced in Q2, and they expect it to continue through Q3 and Q4. It just makes the year-over-year numbers a bit tougher.
Okay. And then there's the Capital One and Discover debit portfolio migration. That's been in the news.
Yes. The key takeaway from the call was that the vast majority of the net revenue impact from this, it's expected next year, in 2026, with only minimal impact in 2025.
So not a major hit this year.
Seems not. And importantly, they stressed their partnership with Capital One on the credit services side remains strong. It's not a total break.
Got it. What about cross-border? Still strong overall, but any nuances?
Overall growth remains strong, yes, in the mid-teens. But they did note some moderation in specific markets in the Middle East and Africa,
Why is that?
mostly due to tougher comparisons from last year again, but also some impact from enforcing Mastercard rules in certain regions and, the ratcheting up of geopolitical conflict.
Understandable.
But it's important context that cross-border travel is about 60% of their total cross-border volume. The other 40%, non-travel or card-not-present online spending, is growing at roughly 20%.
So pretty diversified.
Yeah, that diversification helps cushion them against regional slowdowns in travel, for instance.
What about competition from those big domestic account-to-account players, like PIX in Brazil or UPI in India? That must be a challenge.
It definitely raises questions. Their strategy seems to be differentiating their own product set, like revamping their debit platform in Brazil for online use and focusing on strong partnerships with both banks and fintechs.
So offering something different.
Right. They see huge opportunity in these fast-growing digital economies by providing choice and really leaning on their strong credit card proposition, which isn't always replicated by those domestic A2A schemes.
Okay, now let's wade into the regulatory and legal landscape. And just a reminder to everyone listening, we're relaying the information from the sources here, not endorsing any particular viewpoint.
Good point. It's clearly a significant area. For instance, Mastercard acknowledged ongoing talks about banks potentially applying fees for consumer data access, like related to their Finicity acquisition.
What's Mastercard's stance there?
Their fundamental belief, as they stated, is that direct consumer-consented data sharing is really important for enabling better financial services.
Okay. And the litigation front sounds busy.
Yeah, that's one way to put it. Complex is another. There's the U.S. merchant MDL litigation, that's multi-district litigation where lots of cases are combined.
What's the status?
Mastercard has set aside or accrued $544 million for probable liabilities, but around 60 individual merchants opted out of the main class and are still suing, claiming aggregate single damages of roughly $10 billion against the networks.
$10 billion. That's a huge number.
It is. Mastercard's share of that potential liability would be about 36%. The first trial for some of the bigger opt-outs isn't until April 2026, so that's still a way off.
And there was another part to that, the rules relief class.
Right. That class was seeking changes to business practices, not just money. A settlement agreement there was actually denied by the court, so discussions on that are ongoing.
Okay. What about Europe? Interchange fees have been a long-running issue there.
They have. Mastercard has resolved substantial claims in the UK and pan-Europe, but about $0.3 billion in unresolved damages claims still remain. And just in June 2025, a UK trial court ruled against them on some liability issues.
Are they appealing?
They said they're seeking to appeal that decision, yes.
And there are collective actions too, like class actions.
Yes. In the UK, a proposed collective action related to commercial card transactions, claiming over $1.4 billion, was granted class certification. So that one moves forward.
And the consumer one, that was massive, wasn't it?
It was, claiming over $14 billion. But the trial court actually ruled in Mastercard's favor on key points like causal connection and statute of limitations. It ended up being settled for about $275 million in December 2024.
So a much smaller settlement than the claim.
Much smaller. Although, interestingly, a litigation funder is apparently appealing how that settlement money is being allocated. Still not completely finished.
Wow. Any other European cases?
Proposed collective actions are ongoing in Portugal for about $500 million and the Netherlands for over $0.4 billion.
Hey.
And down under in Australia.
Australia, right. The ACCC, their competition watchdog.
Yeah, the ACCC filed a complaint about Mastercard's debit program agreements, alleging anti-competitive conduct. There's a hearing scheduled for April 2026 on that one, too.
Okay, back in the U.S., what about ATM surcharges?
They settled one class action, the bank ATM consumer class, for $93 million, approved by the court in June 2025. They also agreed on terms for the non-bank ATM consumer class and set aside $79 million for that in Q2.
But there's still one ongoing.
Yes, the ATM operators class is still ongoing, and they're alleging over $1 billion in single damages.
And the EMV liability shift. Chip cards.
Right, the U.S. liability shift litigation. This alleges a conspiracy to unfairly shift fraud liability to merchants who hadn't adopted chip card readers. Expert reports in that case allege over $1 billion in damages against the networks.
What's the status there?
Mastercard's motion to get the case dismissed, summary judgment, was denied. So that case looks like it will proceed.
And finally, regulatory probes. Are governments looking into things?
Yes. They mentioned cooperating with a civil investigative demand from the U.S. Department of Justice Antitrust Division that's focused on their U.S. debit program and competition.
And Europe.
A formal request for information from the European Commission regarding alleged anti-competitive behavior related to network fees. So, scrutiny on both sides of the Atlantic.
They also mentioned something about Iran.
Ah, yes, the Iran Threat Reduction Act.
Yeah.
They noted a single, very small de minimis transaction for consular services with an Iranian embassy was identified through their compliance systems. The financial impact was negligible.
Okay, so quite a complex legal and regulatory environment to navigate.
Definitely keeps their legal teams busy.
So with all those dynamics in mind, the strong growth, the strategic initiatives, but also the headwinds and legal issues, what's their outlook for the rest of 2025?
Well, given that strong first half, they're actually tightening their full-year net revenue outlook. They now expect it to be at the high end of a low teens range on a currency-neutral basis, excluding acquisitions.
So confidence for the second half.
Seems so. Plus, they expect additional contributions from acquisitions and potentially some tailwinds from foreign exchange rates. Operating expense growth is guided to the low end of a low double digits range.
And still returning cash to shareholders.
Yep. Disciplined capital planning continues. They've repurchased $3.3 billion worth of their stock so far this year through late July.
Okay, so let's try and synthesize this. What does this all mean for you, the listener?
Well, I think Mastercard's latest results really paint a picture of a company that's expanding its reach, yes, through more transactions, but maybe more importantly, by embedding itself deeper into the whole digital economy.
Through that innovation and those strategic partnerships we talked about.
Exactly. And their focus on those value-added services, predicting fraud with AI, enabling smoother payments in areas like insurance that clearly differentiates them. They're trying to be more than just the payment network.
Yeah, this deep dive really highlights how intertwined digital payments are with our daily lives now, from tapping your card on the bus to how a small business manages its finances.
It's everywhere.
But, as technology keeps evolving and the regulatory landscape keeps shifting, here's maybe a final provocative thought for you listening. With the rise of all these diverse payment forms like stablecoins and this increasing scrutiny on data and competition, what might be the next unexpected frontier for payments innovation?
That's a good question.
And how could that fundamentally change what a transaction even means in the future? Something to think about.